You're assessed at 40, you paid 80, they're going to reassess you at 70. How are you going to fight that? You just paid 80, which is market value. True market value is what you're willing to pay, what a seller is willing to accept. That's true market value. Good morning, everyone. Alex Deacon. Today, I'm going to discuss property taxes and how you can keep your property tax assessment lower, therefore your taxes are lower. Many times I buy houses that I'm paying more than the property is assessed at. So for example, if the property is assessed by the county at $40,000 and I'm paying $80,000, I can expect potentially, if that borough or that municipality or that school district wants to raise those taxes because it triggers, something that says, hey, these folks paid $80,000 for this house. It's only assessed to 40. We need to go in, reassess that and get their taxes up. That happens. And I think it's going to happen more and more as, our townships and boroughs are not making any money. So the only way they can do it is tax you more. So you can fight that. Now, when you pay 80 for something that's only assessed at 40 and they come in and let's say they reassess you at 70,000, that's going to be almost impossible to win that. You're assessed at 40, you paid 80, they're going to reassess you at 70. How are you going to fight that? You just paid 80, which is market value. True market value is what you're willing to pay, what a seller is willing to accept. That's true market value. So how are you going to fight that? Pretty tough. If they assess you at 120, because everything in that neighborhood is selling for 120 to 150, and you only paid 80, that's going to be a lot easier for you to fight. You'll be able to appeal that. So you'll get a paper in the mail that says, look like you just purchased the property. The school district is reassessing you and they feel the fair market value is 120,000. Well, hold on. I just paid 80 for it because it needs this, it needs that. I got to put 50,000 into it. They don't. Maybe it's worth 120 as it sits, but they don't know that. You paid 80. So that's a strong case for you to fight that and get the assessment reduced from where they want it down to 80,000. So there are times when you can fight the system and you should be able to win, but you don't always win, but you have to fight that because that could be, let's say your taxes are 2,000 a year at your current assessment and the township wants another 1,000 a year, that's almost $100 a month. And that could, on a rental property, that could be half your cash flow. So there are ways to keep the sales price down. That's what you want to focus on, keeping that sales price as low as possible. The only downside of that is when you go to sell it, your basis, right, is going to be the IRS is going to, you're going to get taxed. The IRS says, oh, you only paid 70, you really paid 80. But I'll show you how we can make the sale price 70. 70,000. Now you're assessed, your basis starts at 70. So if you sell it in 10 years for 200,000, they're taking your basis at 70,000, not 80. The pro far outweighs the con in this case. So the pros are, if you can keep that assessment low, the longer you hold on to it, the more money you're going to save every year on taxes. So depending on how long you keep it and keep in mind, there are also county-wide reassessments. Like in 5 years, that county could reassess all the homes. They're doing that right now in Beaver County. They did it in Washington County. They did it 25 years ago in Allegheny County. It doesn't happen often, but it does happen. Most of the time, you'll get reassessed when you just purchase something. So that one of the ways that you can keep the sales price down is perhaps you pay, let's say you agree to an $80,000 sale price. Okay. Then for the owner, I say, look, Mr. Owner, I'm going to pay 79,000 or 79,200, but I'm going to pay your transfer tax. So yeah, you're going to pay a little bit more in closing costs, but you're getting a reduced price on the house. So you have to come to close with a little more money, but you're getting that sale price now to reflect 79.2 versus 80. Another way you can do it is with inclusions. You can do what's called a chattel, which is personal property. Personal property can be carpet, can be a chattel, appliances, tools, furniture, things like you want to talk to your attorney about what can be actually used as a chattel. A lot of times we just say a chattel of $20,000. I mean, you have to be able to substantiate that if somebody questions you, but we do it a lot. But you can actually chattel some things. So maybe again, the sale price now is $73,000. You chattel these appliances, the carpet, yada yada, all these things that you're allowed to, and now the sale price reflects much lower. Now the downside of that is you have to come up with more of your money, because if you're getting financed, the bank typically is not going to finance the sale price plus a chattel. You want to try to focus on and be creative on how to keep the sale price down if you're going to keep this property for long term and you're concerned about the taxes potentially going up. If that's not a concern of yours, if you're going to flip the property or own it for a very short time, then it's not something you really need to focus on or be aware of. Before you do any of this, I would speak with a very good real estate attorney who handles a lot of closings. Talk to you guys before about building your team, and a good team member is an attorney and a good accountant. Speak to your accountant and find out what the IRS will allow, what they won't allow. But the key is, if you get the right advice, give the key people in your life, your team, and keep this in mind, and you want to try to keep that sale price as low as possible, just in case you do get reassessed, because it's a lot easier to fight a reassessment when you just bought it for X dollars and they're assessing you much higher. Say, look, you can't assess me for 120. I just paid 72. There's a reason for that. And then this is it. This is the argument you pose in front of them. It's not always going to win, but you're doing this on a regular basis, and you're accumulating a lot of properties in your portfolio. If you can save $400, $500, or $600 or $1,000 on every property every year in taxes, and you own 20 properties, now you're talking about a substantial amount of money. I think every little bit helps, and it's something to be concerned with and strategize with the team members in your life to come up with a plan on every property. Some you're never going to win. Like I said, if you pay $80,000 and they're assessing you at 70, you're not going to win that. But the ones that you've paid 80 and they're assessing you at 120, you have a very good argument. I hope this helps. It's a little confusing, but again, if you have any questions, you can always email me, alex@alexdeacon.com. I have a good appeal person who does all of my appeals when I need to. And I have access to good attorneys and accountants. I can refer those people to you for more questions. You can follow me on Instagram and Facebook, and I look forward to helping you. What I do, I do enjoy it. You have a good day. Thank you.